Hello and welcome. Today we're talking about the right life insurance questions, asking the right life insurance questions. There is a lot of confusion when it comes to life insurance. And let me tell you something, all policies are not created equal. Okay. So it's very important when looking at life insurance to understand what are the right questions, what is the information you need to know when deciding what is the right life insurance for you and your family and your business, whatever you need to insure, man.
Insure you're your greatest asset, so insure that asset.
Yes. As you're coming in, please let us know where you're tuning in from. Like, comment, and share. And if you know anyone that could benefit from this information, tag them, comment, ask your questions. So we kind of have a segment this week. We've been talking about asking the right questions. We get a lot of financial questions all of the time. And so we want to help you we want to empower you with the right questions so that you can get the right information to make the right decisions and get the right results. So we're talking today about asking.
So Rain, please put in the comments hashtag insure that asset. Insure that ass and insure that asset. Insure DAT. Hashtag insure.
What it's all about. What it's all about, we're going to talk about. We're talking about life insurance. What are the right questions to ask when looking for life insurance? So,
Johnny, would you mind just adjusting that one right there? It's a little halfway through on Chelsea's stuff.
Yeah.
No, mine.
So we want to help you to build an unbreakable financial house so you can handle anything that comes your way, and understanding what makes up your financial house and how to strengthen it is vital. And one of the building blocks is proper protection. So life insurance is a huge part of the foundation of your financial house. It ensures the financial survivability, financial survival of your family, your business. There's many different uses for life insurance. So the first question to ask is, what are the types of life insurance? A lot of people, when they come to us and they ask about life insurance, and maybe they got a quote somewhere, or maybe they have a policy, and people think that all life insurance is the same, or because it's one type that it has all the features. But there are many different features when it comes to life insurance. So the key thing to understand when it comes to what are the types of life insurance, there's two main types of life insurance. There's term insurance. That's the cheapest life insurance. It generally lasts for a period of time. Well, it lasts for a period of time, generally like 10 years to 30 years, and then there's different amounts in between. And most term policies, you have to die for it to pay out. So the term policies that we use in our business has something called living benefits. Now, this is very important to understand what living benefits actually is, because most term policies have something called terminal illness, which means like if you were diagnosed with a terminal illness and expected to die within 12 months.
So define what terminal illness means for people?
Well, that's what I'm saying. If you're something that you're going to die in 12 months. So it could be cancer, it could be some kind of illness that you're going to die in 12 months. Terminal, going to die. Okay. Then the life insurance will pay out early because they know that they're going to have to pay out within 12 months anyways. That is not living benefits. Okay. Most policies have that already. So do not be fooled if somebody tells you that is living benefits. Living benefits means you can actually use the death benefit. You can get paid from the life insurance company while you're alive if you got sick or hurt. So, meaning critically or chronically sick or hurt. So like if you got cancer, but you weren't necessarily, it wasn't terminal, like you weren't expected to die within 12 months. If you got a heart attack, okay. Also could be something like arthritis. People don't die from arthritis, but it can affect your ability to type on the computer, dress yourself, make yourself food. So it affects your daily activities. So those are things that living benefits can give you access to your life insurance policy, even if it's a term policy. Okay, so that's term policy.
So one quick example is, when you go to the next part. So we had a guy who suffered 2 heart attacks. He survived, right? He's had a heart attack, and then he had another one out in the back of that, so he survived.
Dang.
So he made it. He was a trooper. So this guy survived 2 heart attacks. He received $272,000 from his life insurance policy while he was still living. This guy's a farmer, family man. He's got little kids. That money was able to help him save his family's farm. So when I say insure that asset, I'm talking about insuring yourself. He made sure he had the right kind of insurance on himself that was able to pay him money, cash money, lump sum, boom, 272 grand. He received that money and was able to save his family's farm. Now, here's what happened what would have happened if he didn't have that in place. Number one, he would have foreclosed on the farm. It would have went out of business because he wasn't there running things. It was a family farm. He wasn't there operating things. It would have gone down. They would have lost their farm. They would have lost the asset. The kids would have lost their inheritance, blah, blah, blah. This has happened in many families. So understand, when we're talking about these things, health insurance will pay your medical bills. Health insurance isn't going to send you a big fat check. Okay, if you suffer a heart attack, you got sick. That's not what they do. They're going to send the hospital a big fat check and not send you anything. So when you are talking about life insurance, you want to be able to look at that factor. So the guy's name's Dave. Received $272,000 from his life insurance policy while he was still living after he suffered a heart attack and survived.
Yes. Prosper with Regina says a lot of people don't know that. Good info. Yes. Even a lot of life insurance agents don't know about living benefits. This is a newer feature that not all companies offer, and not all agents even know about it. So it's important that when you're talking about life insurance, that you're getting the right information from somebody who knows about what these policies offer. And also, one real quick tip too, if somebody tells you, so I'll tell you the other type of life insurance, which is permanent life insurance. And if you go to any life insurance agent and they tell you one is good or one is bad, then trust me, they probably only sell that one, okay? Because there are features and benefits of both types of life insurance, and we're going to talk about how to know which one is right for you, okay? So the other type of life insurance is permanent life insurance. It lasts your entire life. There's many different types of permanent life insurance. You may have heard of whole life, indexed, universal life, different ones. They're all part of permanent life insurance, which lasts your entire life. It costs more than term policies because they last your entire life, but there are also more features with these policies, okay? So some people just want it for life insurance for their entire life, okay? That's one type of permanent life insurance. There's also a feature in permanent life insurance policies that you can build cash. You can build cash in your policy and it grows tax-free, okay? So some people may use this for retirement. They may use it for retirement. They may use it for college for their kids. They may use it, this cash you can build up, and then you can actually leverage it, meaning you can take a loan from the life insurance company, means your money still keeps working in the policy, growing, building, tax-free. And then you can take that to go invest in something else, like cash flowing real estate, or invest in your business, or, you know, whatever you want. And you don't actually even have to qualify. Most loans, when you take a loan, you have to qualify by, you got to have income, you got to have a certain credit score, you got to be using it for a certain purpose. Life insurance, nope. You got the money in your policy, you qualify. So those are the two main types of life insurance. And we'll go into a little bit more about how to identify which one is right for you, because that's very, very important.
So, yeah, you want to read that question? Now I'll go into some.
Yeah, why when you explain this to people, they get so mad. Okay, here is something. When somebody gets very emotional or very mad about something, if you try to have a conversation, this happens with financial advice. This happens with politics, okay? It's usually high emotion, low intelligence. And I'm not saying that that all people who get upset about these things are stupid. What I'm saying is they don't have enough information about it. So somebody may work for a insurance company and they only sell a certain type of life insurance, and they are told every other policy, every other type of life insurance is bad. This is the only one. And they are told to sell that policy, and they're told what to say and what to believe, and they may not look anywhere else. So they just simply don't have the information. They don't have the knowledge to know that these are just vehicles. These are financial tools, and it depends on where you are financially and what your financial goals are that determine what is the best for you. So when somebody gets very emotional and upset about something, you're not really having a conversation with the person. They're just reacting out of what they've been told or sold.
Yeah, and look, people have preferences, right? So if my preference is Japanese cars, or I say German cars are the best, or Italian supercars are the best, okay, that's a preference. I'm not going to go and say American car. I'm not going to spend my time bashing American cars. There might be an appropriate use for an American car. The person may want a Ford pickup truck because that's their business, right? So there may be a type of vehicle may be appropriate for one person that's not appropriate for another person. Doesn't mean the vehicle is bad. Financial vehicles are just tools, like Chelsea was saying, just vehicles. A financial vehicle is either appropriate or inappropriate for somebody or a situation. And so since a person doesn't know everybody's situation, they can't say what is appropriate for somebody else or not without knowing the details of that person's situation. So what Chelsea's talking about, that when they get mad, whenever somebody gets super emotional, their thinking is out the window. So that's what it means by low intelligence. So it just means that in that moment, they're not thinking right. So the only thing is to react emotionally to something, which is kind of weird. It's kind of comical when I think about it.
So the second question to ask yourself when you're looking at life insurance is, how do I know what is the right policy for me, right? We're just talking about the difference so you can understand what the difference is between the policies, and then how do you determine what is the right policy for you? And we talked a little bit about it as far as understanding where you are financially and understanding what is your goal with life insurance. Are you just using it for a death benefit to leave an inheritance to your family or your church or your charity or whatever? Or do you want to build capital and then leverage to be able to, clone your money and have it work for you? Or do you want to build a retirement? So first you have to understand what it is that you're trying to do, and then where are you financially to understand what you qualify for.
Yeah. So when you start asking that question, the first thing is look for somebody who is competent. Look for somebody who is competent in this field that you can get the information from, right? The problem with social media is like everybody's got opinions, just like what they say. Everybody's got
an a-hole.
Everybody's got an a-hole.
They got an opinion.
Everybody's got an opinion, and everybody's got an a-hole. Okay. I don't need to be crude this early, but
you have one. You don't have to be one.
I'm just trying to keep you entertained. Just trying to keep you guys entertained this early morning.
Regina, yes, we will check. Well, that's on yours, so we'll check your DMs.
So look, when you start asking these questions about, hey, what's the right thing? What's the right one? Find somebody who's competent, number one, and somebody who knows what they're talking about. If you're perceptive, you can tell if somebody knows what they're talking about or not. Sometimes people can't. Some people are like, they're slick, they're BSing, whatever, all that. Find somebody who's like, hey, this person explains things in a way that makes sense to me. People, when they don't understand something, they will use big words to confuse you and seem smart. It actually have the opposite effect of that. You get confused and lost by the big words they use, and you're like, I don't know what the hell you're talking about, so you're actually not even communicating with me. So make sure you follow, you pay attention to somebody who is competent, and then ask them those questions. Hey, here's my situation. Here's where I'm at. What do you think based on that, or what I'm trying to think about? What would be the right type of policy for me? And then they will ask you questions and guide you to the right thing. So
I just realized I had yesterday's show.
Yeah, I saw that. So somebody asked, can you open a policy for someone that is not your child or spouse? Say you're a legal guardian or niece and nephew. Sorry, I spotted it, so I decided to read it. So
I know, because I'm waiting for you to take a breath and it doesn't happen.
No, I'm just talking fast. That's all. So I'm still breathing. It's okay.
Okay.
I'll tell you guys a little side note about my tribe, the tribe I'm from. I'll tell you guys a little side note on that in a second. But can you open a policy for someone's
Okay,
not your
great.
child
So
or
then
spouse?
it's going to continue on.
Yes.
Still no breath.
If you are the legal guardian, you're the legal guardian, you would be able to. Sometimes it varies with companies. Some companies may have an internal rule whether allow that, but generally, if you are the legal guardian, you should be able to open a life insurance policy on them. If you're not the legal guardian and you're just their aunt, you would need permission from their parent because a parent or a legal guardian has to sign off on them getting it. So even though it's a great idea, you want to get a life insurance policy on them, the person has to sign off on it. You can't really open a life insurance policy on another adult because the adult has to sign consent saying, yes, I'm applying for this life insurance policy.
You can if they know about it and agree to it, though.
You can't just open it on them without them not knowing about it because the person has to give consent and sign for saying, yes, I'm applying for this policy.
Regina, my page is @1 Chelsea Matthews, and then on our YouTube, we're Martin and Chelsea Matthews.
Yes.
She wants to follow me too.
Yeah, we got to connect. Regina and I are going to do a live stream together. We're going to discuss it. We'll work out the timing, Regina, so we can do some live, and I think it'll be super awesome. She's super positive, got a great vibe. So I'd love to connect with her on that.
So let's talk about using life insurance to build cash and leverage for other assets. You may have heard terms infinite banking, become your own bank, all of these things. People are very interested in that. And we help a lot of our clients to use life insurance in this way to build tax-free wealth. One of the things we talk about is protecting your money from the 3 enemies of your wealth. Okay. And so this type of strategy helps protect your capital from taxes. It grows tax-free. It grows at a much faster rate than if you just have your bank. If you're storing money in the bank, you're earning a whole lot more money. And then also market risk. The policies that we use are not in the market. So your money is not going to go up and down. You're not going to have losses. Mm-hmm. And so we help a lot of our clients to use these types of policies. Martin is really in the very top tier of people who use this strategy and design these policies because they really have to be designed correctly. We custom design them based on each client's where they are financially and what their financial goals are. So it's really important when you're looking at this type of strategy that you work with somebody who knows what they're doing and knows how to design these policies properly. And then also to know when you're ready to use a strategy like this.
And so the one thing to understand, thanks, sweetheart.
You're welcome, sweetheart.
So one thing to understand is, by the way, if you guys would like us to do a training on using life insurance to buy real estate, let us know. Like, send us a DM, leave us a comment, let us know if that's something that you'd be interested in, using life insurance to buy real estate. So the policy has to be properly structured. If it's not properly structured and properly funded, it will not perform as advertised. Meaning somebody might say, yeah, your life insurance policy will build cash. But number one of the biggest difference, Regina says, yes, absolutely. Okay, so we'll work that out. Somebody says, yep, everybody's interested in that. Okay, good. We'll work out a date where we'll do that. I was interested in this concept because I came to America and I wanted to learn about money and finances, what rich people did. And then one guy told me, look, rich people buy a lot of life insurance. That's one of the first things he told me. I'm like, that doesn't even make sense. If they're already rich, why are they buying life insurance? You know why? Because my knowledge on life insurance was so low, I was just thinking about dying. He goes,
rich people do not self-insure.
No, rich people don't self-insure. I'll do some videos and I explain why the biggest life insurance policies are owned by rich people. Rich people
a lot of people want to see that.
Okay. I came from Liberia, West Africa. That's where I was born. I grew up in Liberia, West Africa. I lived on 3 continents for I was 12 years old. And then I moved to America, escaped a civil war in my country.
I escaped California.
So the way you utilize these, they have to be constructed and built properly. And there's certain companies you use them with. Like, for example, let's say Company A. Company A may have 3 to 6 different types of permanent life insurance policies. Some of them are just super basic. They're just for somebody who wants to have life insurance that lasts for as long as they might live. There are other ones that's designed for the insurance company that build the policy and design it specifically for using it high cash value in earlier years because they know people want to use it for its banking function, want to leverage it to buy real estate, things like that. If you don't know that as a buyer, and you don't know that, and an agent offering it to you don't know that, then you could be getting a super basic life insurance policy that's not optimized for cash building with the right companies and the right features. And so another difference with somebody like us is we own an insurance agency. So we do business with a lot of different insurance companies. I don't work for any insurance company. That means I don't have to represent Nationwide. I don't have to represent State Farm or represent whoever. So that means we work with our clients, figure out what is the best thing for them based on what they're trying to achieve. And then we go and use that company in that scenario because not everybody's the same. So, and it's very, very hard for one insurance company to be great at all the different types of life insurance. So if you see a company like for example, Allstate advertises car insurance and homeowners insurance, right? That means that's their focus. Their focus is not life insurance. That's not their life insurance. Retirement is not their focus. They may offer it, but that means you're going to have generally a very basic policy. It's not going to be optimized and built for that purpose because it's very, very difficult to be great at all these different types of life insurance. But if you don't know that, that's why we educate people. All these videos we do for free and all this stuff is to educate you so you're better empowered. Nigeria, yes, I love Nigeria. I've been to Nigeria twice, had good times there. And so awesome. Let me see what else. And look, your policy. So when Chelsea says I'm one of the top, I don't like to say that about myself. Maybe I should say that more often. Chelsea always says that about me, but it's just because I've studied this subject in depth a lot. And we have clients who put hundreds of thousands of dollars a year into their life insurance policy. I don't mean the person buys $100,000 life insurance policy or $1 million life insurance policy. That's a death benefit that you can buy very inexpensively. I'm talking about the client physically sends us hundreds of thousands of dollars a year to put inside of their life insurance policy to store and accumulate cash in their life insurance policies. So on average,
well, they don't send it to us. If a life insurance agent ever says pay me directly,
let me clarify that.
That is not how it's done.
I'm just saying it simply so that people can understand.
They put it in their policy.
They put it into their policy. It goes directly into their life insurance policy. We don't receive funds from the clients in that fashion. You should not. An insurance agent should not receive funds. For this. So it's very important you understand. There's a lot more details to these policies. There's let me explain something else to you. I won't go into details on this part, but let me explain something else to you. Life insurance is sold based on commission, just like when you buy a house, right? You buy a property, there's a commission, right? You do a mortgage, there's a commission. Buy life insurance, there's a commission. So the life insurance agent has to balance, right? The life insurance agent is going to get paid, but they got to design the policy in the right way to get the most benefit for you. The way we do the designs on our policies reduces our commission to the lowest that it could be on that particular transaction because of how it's structured. That means you end up with more money. So if you go to somebody else and they're trying to balance paying their bills that month and they need that sale, and they may or may not act in your best interest based on that fact. A lot of consumers do not understand this fact or understand how insurance people get paid. But now you understand there's a lot more to it than that. But I've seen it a lot. I've seen a lot of policies that are not properly designed. They're poorly designed. It takes forever for the person to build cash. They got to wait 20 years to build cash, which is gives some of those a bad name. They're like, oh, you got to wait 20 years to use it. Why the hell would you wait 20 years to use it? Depending on how our policies are designed and how the client funds it, sometimes they can use it the next week. So we'll have
unless you're planning to use it for retirement.
Unless you're planning to use it for retirement, which is fine. But sometimes we'll have a client, they'll put in, 50 grand, 100 grand, and they'll take a loan against it the next week. Meaning they're not buying, let me make that clear, they're not buying $100,000 of life insurance and borrowing against a death benefit. This is somebody who has $100,000 in a bank account. They take the $100,000 and they put it inside of the life insurance policy to earn interest. While that money is accumulating, earning interest, they take a loan against that money and they use it in another location, typically to buy other assets. So one thing to really understand about rich people is a lot of people think singularly, linear. Think I go to work, I get paid, I put my money in my retirement account, and maybe I retire. Wealthy people got wealthy because they think not just linearly, they think compoundingly. How can I get my efforts to compound? How can I get my money to compound? So a lot of wealthy people are very comfortable with the idea of leverage. Leverage means I own something and I borrow against it, right? When it comes to financial. So if I own an asset, the life insurance policy, and I leverage it to buy another asset, now I have two assets working for me. I've now leveraged myself and I can compound my wealth. Now, if I only have one asset and I'm too scared because Dave Ramsey says debt is bad. And so now instead of asking for clarity, what kind of debt are you talking about specifically? But when you just think, oh, debt is bad, then you're like, I'm never going to have any debt. So instead of leveraging to buy other assets, you just worry about you paid off your house and now you got a house that's paid off and you have no other assets. So a lot of wealthy people would leverage their properties to buy more properties. And you look, how did that person get a massive real estate portfolio? They freaking use leverage. They borrowed from the bank. They've got with partners. They raised capital. That's how they did it.
Yes,
They didn't save their way to that.
Other people's money.
Yes. Mm-hmm. And a lot of people have capital to want to put to work. So
okay, so the third question to ask when it comes to asking the right questions when it comes to life insurance is, Martin and Chelsea, how can I get some life insurance from you? This may be the most important question you ever ask in your life.
More important than will you marry me, okay? This is the single most important.
You got to have your foundation in place. You're going to get the yes because you can say, will you marry me? Because I bought life insurance from Martin and Chelsea.
It will ensure you get a yes.
They'll say yes. I know that you make good decisions.
They're like, damn, you got it from them. Okay, I know you. I know you're a smart person. You make wise decisions in your life.
Yes. It'll be the easiest yes you ever heard.
That's a signal you make wise decisions.
So if you would like to learn more about this Become Your Own Bank strategy, how to leverage life insurance, we can actually put together an example where you can see what your numbers would look like using this strategy. But we do have some recommendations for qualifying to be ready for this strategy. And that is that we recommend you be in a position to put at least $6,000 per year or $500 per month into a strategy like this. That's really like a starting period. We have our average client puts in $60,000, $70,000 a year. Some more, some less. So if you qualify and you want to see an example of what your numbers would look like using this strategy, you can go to 6buildingblocks.com/bank, 6buildingblocks.com/bank. And if you're not quite ready for this strategy yet, then reach out to us on YouTube. You can leave a comment. On Instagram, you can send us a DM and you could just comment life insurance. You can let us know that you're interested in some life insurance, but not quite ready for that strategy. And we can help you identify what would be the appropriate policy for you for where you're at now. So 6buildingblocks.com/bank. If you have any questions, please feel free to reach out. Regina, yes, we'll put the link in the chat. And also, there should be a link in our bio as well.
Yeah, check in our bios when the stream's done. We'll leave it in the comments. On Instagram, when the stream is done, all the comments disappear.
So we'll post the live, and then in there we'll put the link in there. 6buildingblocks.com/bank.
Yeah, and look, this is a cool strategy. A lot of people want to understand how it works. Very, very important that you understand. You see numbers. By the way, numbers will always tell the story. Always look at the numbers. Okay, so understand, looking at the numbers, all that. When we talk about leveraging this to buy real estate, look at the numbers. And then when you look at the numbers, you understand how you use it, how you can leverage it. People use these strategies to become private lenders. There are people who use this strategy to lend to other businesses that they have. So you talk about startup capital, right? So they'll fund their policies build it up, and then leverage it for other business entities that they have. And then they pay that other business entity back with interest, leveraging their life insurance policies. There's so many different ways this can be used. The thing is, one, understanding it, being in a position where you can fund it properly, and then working with somebody who is competent to be able to explain to you how it actually works and how it can be used. So thanks for watching. We're happy to help you out any way we can. Make sure to go to 6buildingblocks.com/bank. And you can request scenarios